Good morning to all of you.
Morning, sir.
Morning, sir.
Yesterday, we we did introduce on the topic 2, okay, which is on management information, which is on management information, and we did make an introduction. Don't forget, at the end of the day, the management information, what you as a cost accountant, what you as the management accountant, you want to do is to provide the management with information to assist them to be able to make a decision, okay? To assist them to be able to make a decision with regard to certain things. For example, to plan on maybe in the future of the company, to control some things, for example, okay? So you're going to provide information that is meant to for the managers, okay, with the intention of helping them being able to carry out, okay, their work or their responsibility or their duty in an effective manner, okay. That's what we did introduce yesterday, okay. So we pick from where we left, okay. A quick recap. We said that at the end of the day, their information or the information you're going to be giving to the managers, okay, what we call the management information, you're going to derive it from what we call the data, okay, and the data is what we refer to as the raw information. It is yet to be processed. But once it is processed, and processing is something very simple. For example, to process can mean to sort out data, okay? For example, customer in different region, okay, you can have an array of customers, okay? For the past 1 month, how much sales have we made? Okay, we have made sales to 100 customer. If you sort those customers out, okay, customers who bought below 100, customers who bought above 100. Now, that simple sorting out is a process, okay? Now that becomes therefore now information, okay? Once the data become processed, and processing also, okay, don't take the term process as if it's something too hard, okay? It can be even to add, to subtract, okay? Simple arithmetics, okay, to sort out data, okay, to group data, okay, that itself is a processing. Once it becomes processed, it becomes therefore information, okay, which is now become therefore meaningful to the users, okay, become therefore meaningful to the users. That management information, okay, this is going to be information you're going to be giving to the managers, okay, mostly from course internal sources with the intention of helping them out to be able to run the organization in an effective manner, okay. You can see that at the end, the information, okay, you're going to be having maybe contain financial information as well as the non-financial information. Financial, of course, definitely is about the money, okay, you're going to be evaluating based on the money term, okay, what we call the financial information, as well as case of the non-financial information, okay. The name of the customer in itself is a non-financial information. The sale you made to that customer is a financial information. So, of course, the information you'll be presenting to the management will contain both financial as well as non-financial information. We see that why do the manager want this information? What's the purpose of us giving this information to the management? Of course, we say about the plan about the future of the company. Okay, you want to the company want to buy a new machine. So you, as the management accountant, you want to give the management information that is going to assist them to arrive at this decision. Okay, for example, is this good enough? Okay, should we go ahead, for example, and make and buy this machine? Plan about the future. We want to, or in 3 years' time, we as Equity Bank, for example, we want to expand from market A to market B. We want to expand from Kenya to Congo. Okay, so it's about planning about the future. Okay, so what sort of customer do we expect to get in Congo? Okay, how different are they between Congo and between Kenya and Congo? Okay. So you have to do all this information. You as a cost accountant, you as management accountant, you are the one who is going to give more to us, the financial information to the management to help them, for example, in making that decision. Okay. As well as controlling. Okay. Don't forget, at the end of the day, as a business, you have to learn how to control how the company is operating. If you're not in control of how the company is running, that's a big problem. Okay. So you're going to give information. An example. Let me give you an example. If the company, maybe as per last year, okay, they had a target, okay, that the total cost of material we are anticipating in the next one financial year is 10 million, okay. So that's just an example, okay. So in the year 2019, the company had a forecast, so they call it this forecast, okay. The total material cost, it will be, for example, 10 million, Okay. Now you as management accountant, at the end of the year, you make an evaluation. This was a forecast, but what was the actual cost? The actual cost, for example, was 12 million. Now there's a problem here because this is what you are anticipating, okay, to spend 10 million, but you end up spending the actual cost spent was 12 million. Therefore, you as a cost accountant, you may want to, for example, explain to the management, why do we have a divergence here? Why do we have a diversion here between what was the forecast and what was actually incurred? Okay, so you may want to do further analysis, okay, to help the management to be able to control the cost, for example, in the future. Okay, so you give information also for control purposes. Okay, we discussed all this yesterday, and we see that, don't forget, it's good to make a comparison between the management accounting, okay, as well as the cost accounting, as well as the financial accounting. Okay, don't forget there's a key distinction between the two of them. Okay, and Vicky already mentioned that. Don't forget when it comes to, for example, the preparation, okay, of the report, who is going to want this report? Okay, in the case of financial accounting, don't forget the reports, for example, are prepared for the shareholders. Okay, they are the shareholders who want this information. The external users. In the case of the management reports, don't forget these are going to be processed. They're going to be prepared for the sake of internal consumption. It is the management, it is the employee, it is the managers, okay, it is the board of directors that need this information. Okay, so anyway, let's go through them. So this, in the case of manual accounting, they usually produce monthly. Okay, not even monthly, by the way. Okay, they can produce as per need arises. Okay, so for example, in the case of if the company has weekly targets, for example, okay, so this management report we produce based on the need of the management, in this case, a weekly basis. Okay, so the production of when it comes to these reports, okay, they're going to be processed, they're going to be prepared on the need basis, okay, depending on what the management needs, okay, depending on what the management need, okay. So therefore, they can prepare as frequent as possible, okay, as per what the management wishes. On the other hand, when it comes to the financial statements, okay, when it comes to financial accounting, the financial reporting, the final financial statements are prepared once a year, okay, and of course they are going to be presented to the AGM, to the shareholders at the annual general meeting, okay. So that's one of the differences between the two of them. The reports, okay, how often are they prepared, okay? In the case of accounting, financial reporting are prepared once in a year. The financial statement are prepared once in a year. Okay, of course, they can be prepared more than once in a year. For example, they can be prepared on a half-yearly basis. Okay, you may find, for example, banks, for example, okay, they prepare accounts maybe at the end of 6 months after the start of the year and at the end of the year. Okay, so either way, but it's not a must that they do produce them on a half-yearly basis. So what is must for them is to produce those accounts on a yearly basis. And actually, that's another difference. That generally, when it comes to the financial reports, okay, when it comes to the financial reports, okay, if a company, for example, Equity Bank, Safaricom, okay, it's listed in the exchange. Okay, by listed I mean that you would call a public listed company. Okay, that their shares are tradable in the NSE. Okay, then it's a must for it to prepare the accounts. Okay, so this financial statement is a must. Okay, it's not an option for the company. In the case of the management report, no one is dictating how you're going to prepare them. Okay, so there's no law that dictates to the company that they must prepare those they must prepare those management reports. However, financial reports, financial statement must be prepared. Okay, I don't know whether I've mentioned that here. Okay, that's another distinction which I think I have not included here. Okay, so first, maybe the management report. The management report, okay, their reports, okay, are not mandatory. Okay, it's not a must that they be produced. Okay, as I mentioned, they are prepared based on the need of the management. Okay, however, financial statements, okay, are a requirement. Okay, for example, for listed firms. Okay, that's another key difference. That's as a company, the management report are not a must. You prepare them based on the needs. However, financial statement must be produced. Okay, if, for example, you are a listed firm, you must produce them. Okay, anyway, so difference. Reports, for the case of the management reports, they produce information, both historical as well as for future information. Okay, when it comes to management accounting, which I think we should, as time goes by, we will see the information you can be producing. Okay, is meant, or rather, it can be both for the past information. I think I gave an example. Okay, we had a forecast and an actual. Okay, so in the case of the forecast, this is about the future. Okay, who prepare this forecast? It's you as a management accountant who are preparing this forecast. For example, in the next one financial year, what is the total cost we'll be incurring? What will be the total cost of labor? Okay, our employees, okay, both casual and permanent employee. How much cost are we anticipating to spend on them? Okay, so therefore will be a forecast. Who does it? It's you as the management accountant. Then you can compare with the actuals. By actual, I mean the history. Now the year has come to an end. Okay, how much have we incurred on our employees? Okay, so therefore you're going to have both a set of information, both information about the future and information about the past. Okay, in the case of financial reports, okay, financial accounting, the report produced, okay, the financial statements, okay, the reports only present the past information. Okay, they are not being prepared for future information. It's about the past information. Giving us, for example, in the past one financial year, how much profit have we been able to make? Okay, we as Bamburi Cement, okay, how much profit have we been able to make in the past one financial year? What has been our asset position, okay, by the end of that first December 2019, for example, okay? So the gain, therefore, be producing, or the information presented through the financial statement is about the history, okay, of the firm for the past 1 year. This is what has happened, okay? Then if you regards the format, okay, how the report ought to be prepared, okay. In the case of the management report, as I mentioned, it is a management who are going to be dictating when they will be produced. At the same time, they are the one who dictates the format of this report ought to take, okay. So there's no any let me call it a standard, okay, that dictates how the financial, how the management reports ought to be prepared, okay. It is within the management liam, okay, it is within the management responsibility, okay, to discern what format this report will be taken, okay. So there's no like sort of an external party that is dictating how they ought to be prepared, okay. That's the case of the management report. Now, in the case of the financial reports, okay, the case of financial statements that are prepared, don't forget there are standards to be followed. Okay, I don't know whether you've done that in accounting. Don't forget there are standards that may be followed. Okay, for example, the IFRS, the International Financial Reporting Standards. Okay, that as a company, don't forget you will be required to prepare your accounts based on the standards that are agreed upon standards. In this case, for example, the International Financial Reporting Standards. Okay. Now, at the same time, for example, since the Kenya law will also have a say, okay, on how you're meant to prepare your accounts, okay. Therefore, the laws of the country, for example, the case of Kenya, okay, what we call the Companies Act, okay. Okay, over and above a requirement at IFRS, okay, you also be having requirements that dictate how you prepare your accounts, okay, through the Companies Act. Okay, this is a law, this is an act of parliament that dictates on how the company ought to operate in Kenya, okay, and also that includes, therefore, okay, how they are meant to prepare their financial statement. So the law dictates how these, how the accounts of the company are meant to be prepared. Okay. In the case of the management report, there is no such laws or standards the management are meant to follow when preparing their internal reports, the management reports. Okay. Clear so far? Any question? Okay, no question. Okay. Now, then when it comes to auditing, okay, audits actually, it's asking a third party, okay, that is by that party I mean someone who is not a shareholder, someone who is not a management, is not part of the management, okay, to come and go through the accounts, to come and go through the reports, okay. What their purpose? With the sole purpose of telling you or informing the appointing party that, hey, the accounts of your accounts, okay, they do present, for example, they do present what is meant. There's no misstatement. There's no errors. Okay, there is no fraud on your accounts. Okay, So for example, if the profit the company has presented is 10 million, okay, you want someone else to come and examine that to tell you, is it true that we made a profit of 10 million? Okay, so this is going to be a third party, okay, that is meant to come and help you out, okay, as the user, okay, to assist you to give or call an independent opinion on whether the profit is 10 million, your assets are 15 million, okay. So you do appoint a third party, that's called auditing, okay. That's what the auditor is that practitioner, is that person, is that professional helping you out, okay, to come up with this opinion, okay. Now, in the case of the management reports, okay, you don't need or they don't need to be audited, okay. They do not need to be audited. You don't need to appoint a third party, okay. You don't need to appoint an independent party to come and give you an opinion on your management reports, okay. However, in the case of financial statements, the law requires you to have your accounts audited, okay, as per the Companies Act of Kenya, for example, okay. The law requires of you, if you are a firm listed, okay, that means therefore your shares are traded through public forum, okay, the NSE, for example, then your accounts must be audited, okay. The key difference that the financial statement, they do require to be audited, okay. The financial statement must be audited, okay. Then most of the time, as I've already mentioned that already, okay, is that these management reports, they are prepared for the needs of the management, okay. So the when, the how, okay, the why, so all those are geared towards the management, okay. So you prepare based on what the management want, okay, based on the format that the management likes it to be like, okay. So all these reports, okay, they are prepared based on how the management wants this to be like, okay. So they're produced for the management, okay. However, when it comes to the financial statement, okay, they are prepared for the owners of the business, okay. Who are the owners? The shareholders, okay. So the financial statement that are normally prepared by the companies, okay, they are meant for the shareholders, okay, to tell the shareholder, this is your company. Within that particular year, for the year 2019, this is the amount of profit you have made, this is the amount of loss you have incurred, okay. This is your asset position by the end of the year, this is your liability position by the end of the year. So the financial statement are prepared not for the management, okay, but they are prepared more so for the owners of the business, the shareholders of the company. Clear on the differences between what should be given statements, okay. You're going to determine among the different statements given here, okay, which one represents a key distinction between management accounting and financial accounting. Clear? Let me just pick someone of you here, just to see whether you're concentrating. I asked a question from that distinction you just made. Ishmael. Ishmael.
Yes.
Good morning.
Morning.
Now, who is an auditor?
A third party brought into a business to verify the accounting statements.
Great. Okay, thank you, Ishmael. That's what we call an auditor in a very simple way. This is a third party. This is an independent third party who is brought in to examine, okay, to verify, okay, the financial statements of the company. Thank you, Ishmael. Okay. Now, what standards are meant to be followed when preparing the financial statement? Let me pick someone else here. Ian. Ian.
Pardon?
You're a bit far from the mic.
Pardon?
Do you say that one of the key distinctions between MA and financial accounting, management accounting and financial accounting, is that when it comes to the financial accounting, there are standards that you're meant to follow. Which are these standards?
Is it part of the distinction or?
It was a distinction, but okay, let me just repeat. You say that when it comes to preparing the financial reports, you're meant to follow standards. There's some set of standards, let's say in quote, rules and regulations, okay, that you're meant to follow when it comes to preparing those financial reports. Now, when it comes to the management accounting, you don't need those standards. No, my question is, in the case of financial accounting, what are those standards, okay, that you follow when it comes to preparing the accounts?
Or you follow the standards that are lawful, that the government standards then.
Okay, and I'll give you an example.
An example of the government standards.
Ian. That escaped you.
Pardon?
That point it escaped you. It seemed like that at the end of the day, there's some set of rules, okay,
Yeah.
that you're meant to follow when preparing the accounts based on when preparing the financial reports, when preparing the financial statement. What are these standards? I agree with your experience. It's quite okay, okay. But I want to give specific, okay, standards that you normally follow.
Oh, specific standards.
Yeah.
Companies Act.
Yes, Companies Act is actually here on the screen itself. Okay.
Yeah.
Don't forget, as a company, you're meant to follow what is contained on the Companies Act. Okay, on the Companies Act. Okay. And
I have a question.
mm,
You know how you said that an auditor is the third party that comes to check the accounts, yeah? So if someone opens an auditing firm, are they the third party or not? Could you please explain that?
If you do open an audit firm, which means therefore you want to practice as an auditor, that's what I want to guess you mean.
Yes, yes. So so as the person that opened the firm, the third party, could you please explain that?
Yeah.
Does that make sense?
It makes sense, definitely. Don't forget, you have that party in that sense that, hey, if, for example, let me give you an example. We have PwC, okay? Don't forget, PwC is an association of accountants, okay, auditors, okay, who come together to form PwC, of course, through the guidance of PwC. I think PwC should be Switzerland. I'm not sure where the headquarters is. But anyway, don't forget, the auditors, the accountants who are qualified to become auditors, they come together to form what we call a partnership, okay? Now, if, for example, you as PwC, you are the auditors of Safaricom, okay, don't forget you're not a shareholder of Safaricom, neither are you a part of the management of shareholder. They imply, therefore, to these two parties, the shareholders and the management, you are a third party, okay? So once you get therefore appointed as the auditors of Safaricom, you as PwC, then you become therefore the third party, the independent third party. I hope that was your question, Anne.
Wait, so if I'm the independent third party, do I still hold a position in the auditing firm because I'm done that maybe started it?
Yeah, the party is coming in place that we are comparing. You're auditing Safaricom, isn't it?
Yes.
You are not a shareholder of Safaricom. You as PwC, isn't it?
Yes.
You're not part of the management of Safaricom, isn't it?
Yes.
Then you are independent of Safaricom.
Okay.
Do you get that point? That
No,
you're not part and parcel of Safaricom. You're coming in only to audit them, not that you have any other association with Safaricom.
Okay.
I hope it's clear. If not, don't forget to ask.
No, it makes sense. It makes sense.
Okay.
Thank you.
Okay, great. Now, I was asking Ian, what are the standards? Ian gave us an example, the use of Companies Act. Okay, of course, as I mentioned, that's one of the rules you're meant to follow in case your company operating in Kenya. When preparing your financial statement, okay, you have to go, what does the Act say? Okay, I should do as the management when preparing the financial statement. Okay, however, we do have other standards you're meant to follow. Let me pick someone here. Hannah.
Yes.
Which other standards do you follow?
International Financial Reporting Standards.
Yes, the IFRS, the International Financial Reporting Standards, the IFRS. Okay, great. A question here. Moses.
Yes, sir.
Answer.
B.
B for boy, of course, the answer is B. Okay. So if I say that the key purpose of MA1 information is to assist in planning, controlling, and in decision making. Of course, the answer is B. Okay. Question 2. Jenga, you answer that question 2. And first go through it and give us the answer.
A.
A, 1 and 4. Hirani, do you agree?
I think it is C.
Yeah.
C. You think it's C? Okay. Whitney? Whitney?
Yes.
What do you think? What's the answer? Whitney, we can't hear you.
I think it's B.
You think it's? We lost you a bit. The question has issues on our connection. Marvin. Marvin.
Yes.
What's the answer?
Yes. B. I think it's B.
2, 3, and 4. Okay, let's put them together. We see what the answer. Which of the following is information rather than simply data? Okay, don't forget, as I've mentioned, the key distinction between information and data is, has it been processed? If once the data become processed, and processing is very simple thing, to be added, to be grouped, okay, to be subtracted, or any extra sub process done over and above the usual, not the usual, okay. But if there's something done on that data set, then that becomes the information, okay. Anyway, number one, a random list of wages of all employees. Now, this is just a simple random list of wages. So what does it tell us? It's not meaningful. I don't think it does give us anything. That's more of data. It does not, there's nothing done to it. It's simply a list of wages of employees, which is done randomly. So there's nothing done that has been done to it. Then that's more of a data as opposed to being information, okay? Anyway, number two, a list of all stock items that haven't been sold. Now that's something else. Okay, this is the next work done here. You're trying to this is a list of stock, okay, that have not been sold. So there's some that have been sold and others that have not been sold. So since you're grouping them, okay, that means therefore you have done an extra work. There's a process done here. Was you're trying to get a list of items not sold. That is a process done to it. Now that therefore information. Okay, the two becomes therefore information. There's a process done here. The grouping of the stock items, one have been sold and others have been sold. Okay, that's therefore 2 is information, not data. 3, a report showing where expenses are 10% or more over the budget. I think that's a process. The grouping of expenses over and above more than 10%. That's the process done to it. Therefore, 3 is information, not data. 4, a list of all invoices that have been paid by the company. This is a process also. Okay, there's a process done here. Okay, a list of all invoices that have been paid for. Okay, there's some that are unpaid. So here, all we want is a list of invoices paid for. This is a process done on those data sets. Okay, therefore this become information. Okay, therefore 2, 3, and 4. Where is it? Which is B. Okay, 1 is not information; it's data. Because now it will be done to that information. A list of wages of all employees, okay, done randomly, okay. If it was a list of employees paid above, let's say, 1 million per year, then that's kind of for information, but there's nothing done to information done to data in number one. Therefore, number one is data, not information. Okay, clear to all of you? Question? Question, yes, question, ask. Oh, it's clear to all of you. That is a question. Okay, okay. Okay, great. Okay. I have one question here. Okay. There's Anne. Anne has a question.
Sir, could you please explain it again, if you don't mind?
Okay. You see that Roman number one, okay, that there's no extra work done on that data set. Okay. In this case, is a list of wages of employees. Okay. It's simply a list. Okay. Does it give us any information? Nothing else. Okay. It's just simply a list of the employees. So I'm saying that in case there was an extra work done on that data set, for example, okay, this is a list of employees, but employees paid above, let's say, 10 million or paid above 100,000. If that's what has been done here, then that is no longer data, but we can therefore information. But as for number one, there's no extra process done on that data. That's what it becomes, therefore, it becomes data, not information. Okay. Then number two, a list of all stock items that haven't been sold. Now, don't forget here, you're going to have a list of stock items, okay, which means therefore there are stock items that have been sold and stock items that have not been sold. Now here you're grouping. But the main effort of trying to put data into groups in itself is a process done on it. Therefore, that can therefore information, not data. Therefore, two is information, okay, because we are grouping the stock items into one that have been sold and the one that haven't been sold for. Okay. Then three, a report showing expenses. If there's no anything done on it, it's just a report showing expenses, then that is data. Okay, I repeat. If, for example, in number three, what we have is a report showing expenses, then that is not information, it's data. However, is there some extra work done on it? Yes, there is. What we are showing is a report of expenses that are more than 10%, okay, that are 10% or more of the budget. Now, that is a process done on that data set, on the expenses. Because you're trying to get to know, okay, what expenses exceed, okay, 10% more than the budget or exceed the budget. Now that is a process down to it. Therefore, three is information, not data. Four, a list of invoices that have been paid by the company. Now don't forget these are invoices. If it was simply a list of invoices and nothing else, then that's data. However, some extra work has been done to it. How? Because you're trying to group them into invoices paid for and invoices not paid for. There's an extra work done on it. Therefore, four becomes therefore information. Okay, I hope that's clear. And
yes, thank you.
okay. Three, go through it. We discuss together. J, do you give us the answer to number three? So which of the following is characteristic of cost and manual accounting rather than external financial reporting? Okay, one, format and content are controlled. This is more towards financial reporting. Okay, this is financial reporting. Okay, backward looking only, this is financial reporting. Don't forget that for the case of the MA, okay, the accounts done at manual accounting, they are both backward looking, that is historical, as well as futuristic. Okay. Often contains estimate about the future. Now this seems to be of MA, okay, because it can also contain about the future, okay. Must be audited. No, is not a must for them to be audited. This is for the case of financial report or financial statement. Yeah, and answer is D. Okay, that's great. Question. Okay, that seems to have been an easy one then. Now, when it comes to getting the information, when do we say that you have obtained good or bad information? Okay, that's the next thing. We want to determine the information set you have here. Is it good or is it bad information? Okay. Now, what are features? What do we look at for? For us to say that we did obtain good information or bad information, okay? The features, we are what we call features of good management information, okay? And again, to use here a mnemonic called accurate, okay, to help us in getting to know what are these features of good information, okay? Using the term accurate, the mnemonic accurate, okay? So the first one, the features of good information, okay, is first that it must be accurate in itself, okay, that there will be no going to be sort of presentation of information that is misrepresented, okay. If it's about the company asset position, okay, if the management knows the company has assets worth only 2 million, they're not going to put a figure of 3 million. They're not going to misrepresent the company profit. If the company made a loss of 2 million, they're not going to put a profit of 5 million. Okay, so there's no misrepresentation. That the information presented is accurate. Okay, it is presenting the true status of affairs. Okay, so accurate, one of the key feature. Okay, don't forget to say that you're going to use the mnemonic accurate. So the first, the A in the accurate is accurate. Okay, so that's clear. It's making sense. Certainly accurate enough for managers to use confidently. Okay, some managers need information accurate to the last cent, or others happy with thousands. Anyway, so the idea is that the managed information that you're going to be presenting, okay, is going to present the true fare of status. Okay, if it's about the cost is 10 million, we are not going to put a cost of 11 million. So that's, I don't know. If the budget, you're going to put the budget as it is. If the budget for the next one financial year for wages of employees is 15 million, we are not going to put 16 million so that you can pocket the extra 1 million. No, okay. The information presented to the manager is going to be accurate. Okay, it is not misrepresented. There is no errors. There is no any misrepresentation in it. Okay. C in the accurate is complete. Okay. C in the accurate is complete. Okay. Don't forget. Go back here. We have A. Don't forget. We have A. So you have A, C, C, okay, U, R, A, T, E, okay, and you have E down there, okay. So A is accurate, next is complete, okay. Now let's look at complete. Now complete means therefore there's no any missing set of information, okay. There's no any set of information that is missing on the information that are being presented by the accountants, okay, to the management, okay, that we are going to present, okay, a complete set of information, okay, no missing data sets along the way, okay. So missing information can be very serious, of course, definitely, okay. Just an example, if, for example, you're trying to make a decision as whether we should continue producing a given product, okay, should we continue producing a given product? You may want to compare, okay, what will be the savings we are going to make in as a company if we discontinue making product A, okay? We shall be saving the wages of the employee, because going forward, since we discontinue operation, there is no paying of employees, no paying of raw material, because we have discontinued. But don't forget, it's what the idea is that the information you can be given to the manager regarding the discontinuation of that particular product, okay, it needs to be very complete. Don't forget, in case it is not complete, there's something missing. For example, you don't include the labor cost saving, okay, because you won't employ employee going forward, okay. That means therefore the information presented is inaccurate. Or if those employees we have, okay, they are permanent employees. Okay, those employees have, they are permanent employees, which means therefore if we discontinue this production, okay, it does not matter whether to discontinue or we continue producing, because this employee are permanent employee. Which therefore you continue paying the employees of the employee whether you continue producing or not producing. Which means therefore, when it comes to making the decision, the information regarding the pay to the employee is not good. It's irrelevant. Let me use that term. Okay. It is an irrelevant set of information. Therefore, it should not be included in the report, for example. Okay. Why? Because the employee, whether you continue operating or you don't continue operating, you still have pay employees. Okay. Therefore, that is a cost that is not going to help you in making a decision. Therefore, it should not be included in the analysis. Is that clear? So by the time here complete, what does it mean? It means that information that is meant to be included has been included. Information that should not be included has been omitted. Okay, that's what I mean by complete. Okay, both sides. Okay, that's when by the term here complete. Is that clear? Okay, great. Then going back to our mnemonic, okay, we have the C here complete. Next C is what we call a cost benefit. Okay, let's go to the next C, cost benefit. When it comes to gathering of information, when it comes to processing information, you pay for it. Okay, you have to have, for example, someone who's going to assist you in processing that information. You pay them. Okay, so when it comes to gathering of data and trying to process that data into information, you have to make an analysis, what we call a cost-benefit analysis. Okay, determine what could be the potential benefit we are going to be receiving if we use this information. What does it help us? This set of information, what does it help us in? Okay, what are the potential advantages you're going to obtain through the use of this information, and what is the cost of us gathering this information? If the benefits, okay, are lower than the cost, if the costs are higher than the benefit, then why process that data? I don't know. I hope I'm making sense. That at the end of the day, you have to make a cost-benefit analysis. Okay, analyze if I was to continue using this particular data set. Okay, what will be the benefit I'll be receiving? Then compare that with what cost have I incurred? Okay, in processing this data. I've employed some data analysts, for example, okay, to assist me in data analysis, okay. But what is the benefit I received from this data they're analyzing? And how much money am I paying them, for example, to do this analysis, to convert this data into information, into useful information? If the benefits are less than the cost, then don't employ them. It makes no sense for you to convert that data into information. However, if we have the benefits, okay, the benefits are they're greater than the cost of gathering that information, then it's good enough. Then continue with that. Okay, if the benefits are more than the cost. Clear? Okay, that's great. Going back to a mnemonic, U is what we call user-oriented. Okay, so U here is about the users. Okay, it's about the users. Okay, now what that mean? It means therefore that the information we are going to be presenting, we are going to be giving to like it's on need basis. Okay, who are the users? Okay, what do they need? Okay, if I was present information to people who are non-accountants, then you may want, for example, ensure you don't use accounting jargons. Okay, you want to have simple terms to be used along the way. Okay, so that you don't confuse them. Okay, get to know who are your audience. Okay, who are my audience? Okay, how well versed are they with the terms I'm going to use in my presentation? Okay, if I'm going to make a presentation, okay, in case this is a law presentation, okay, I don't know, this is legal matters that we are discussing, okay. Who are my audience? Okay, I'm a lawyer. Who are my audience? Okay, are they my fellow lawyers? Because if they are, then of course, therefore, you may use those jargons along the way. Okay, if they're accountants, then the terms of laws they may confuse them. So use simple language. Okay, so get to know the audience. Ensure that the information you're passing on is going to be relevant to the users. Okay, does it mean by it is user targeted? Clear? Okay, the information should be what the user needs. For example, senior management often have to plan for features, so they need more of forward-looking information, more about the forecast. Okay, information. Anyway, so let's go user targeted. Getting to know who is the audience, what do they need? Okay, and of course, as you give the information, as you present the information, you get to know that this is the type of persons I'm dealing with. Okay. Next we're going back to our mnemonic. Okay, you then have R here. It's about relevancy. Okay, relevant. Okay, I think I've explained indirectly. Okay, we call relevant. That the information going to present to them is going to be relevant to the user. Okay, I think it's more like user targeted. Okay, that you're going to present information relevant. For example, if we are making presentation, if for example it's about financial accounting, for example, okay, they're not going to present account for 20. We are now in the year 2020, okay. So in case you again present financial statement, you don't present accounts for 2018. Okay? This is not relevant. It's okay, definitely, but what is of more concern to the users, to the shareholder, for example, is giving the information about the year 2019 and 2020. Okay, so 3 years ago, 4 years ago, might not be the most relevant information to them right now. Okay, so you present information that is relevant to the users at that point in time. Okay, we want to make a decision. The management want to make a decision whether they want to continue with these particular products. Okay, so they is Unilever. Okay, they make Omo, they make Bluebird. Okay, now if you want to present information regarding Omo, don't present information about Bluebird. It is not relevant in that particular case. Okay, well the decision being made here is about the Omo. So present information about the Omo, not about Bluebird. Okay, oh that's clear. Okay, that's by relevance. Okay. At the same time, don't forget, don't give too much information. We'll call information overload. Okay, so only give based on what there's need for. Okay, we'll call, don't give, we'll call information overload. Don't give too much information so that you confuse even the users. Okay. Okay, so going back to our mnemonic A. Okay, A is that is meant to be authoritative. Okay, we call authoritative. This is our A. Okay, now what does that mean by being authoritative? Okay, what is the information source and how reliable is it? Okay, what I mean by that is that who gave you the information? You're doing analysis on, for example, the sales of the company for the last one financial year. Okay, you want to compare, for example, what was the forecast, okay, and what has been the actual. Now, the next question that who gave you this information? You want to do the analysis, but where did you obtain this information from? Who gave you the information? Okay, if the information was given by a junior accountant, then you may want to be, is it really true? Okay, you may have get a bit questionable. Okay, but in case the information was given by the finance director, then of course you get to that, hey, this is the person in charge of the finance in this particular company. So definitely, data given to me by them, okay, it's more reliable. Okay, or called what? How reliable is this data set? Who gave you? Is more towards who is the square? What the source of that set of information? Okay, if you gain, for example, okay, let me give you an example. If you want to discuss matter regarding accounting, okay, who do you look for? An accountant, not a lawyer. Okay, if you're going to obtain information regarding the extent, the house designs, okay, who do you look for? You're not going to consult an accountant. You're going to consult an architect. Okay, so either way, it's more towards who gave you this sort of information. Who is the source of where did you obtain this particular set of information from, or this data from? Okay, what's going to influence how reliable, okay, that data set will be. And of course, also the analysis that again using is based on how reliable the data was. Okay. That's on the going back, okay, to our mnemonic. Okay. Next we have T. Okay, and T here means timely. Okay. If, for example, the best is here. Let's look for a very relevant example to give on timely. But timely more is about that when is more true about when. Okay, is that information you have been presented going to be useful at that point in time? Is there any, for example, potential delays? Mm-hmm. If let me give an example, okay, we had a merger of CBA and NIC. Okay, I think you know these two banks. Okay, and now they operate as NCBA. Okay, now if for instance you're trying to analyze whether is a merger going to be between the proposed merger between CBA and NIC good for the economy? Now, that is an irrelevant analysis. Why it is not timely? Why? Because the merger has happened already. So any analysis that is going to be done regarding the cost, the benefit behind, it's irrelevant. Okay, as it stands now. Okay, why? Because the merger has already happened. Okay, That's more like timely. Okay. What else? Another set of ifs. Let me think of another example. You want to launch a product, okay, or rather, in 2019, the company did launch a product, okay. Unilever, maybe they did launch a new brand of Carson, maybe, I don't know, assume that they did launch a new product, okay. However, analysis regarding whether the market is going to accept this product today is irrelevant. Why? Because the product has already been launched in the market, okay. It is not timely analysis, okay. That's why therefore it becomes an irrelevant set of information, okay. Which means therefore, you as the cost accountant, you as the management accountant, as you provide information to the users, with in this case the management, okay, you provide information on a timely basis to assist them to make a decision much easier way, in a much quicker manner. Okay, don't give information about last year, whereas what the need is about right now. Okay, and the information should be received quickly enough to be of use to the decision maker. Real-time or online system can speed up the supply of information. Okay, I think we mentioned the two systems, okay, of processing information, the batch processing and the real-time processing. Okay, definitely real-time, okay, is much easier. The information is going to be on the hands of the users in a much quicker manner as opposed to the batch processing method. And of course, the information ought to be easy to use, okay? Going back to the users, okay? Get to know who are my users and tailor make that information to their need, okay? It should be easy for them to use, okay? Tailor make the data to what they need, okay? And those are the 8 features of good information. I think there are 8. Yes, there should be 8. Let's see, okay? So we have 1, 2, 3, 4, 5, 6, 7, 8 years. Okay, there are 8. Okay, so those are the 8 features of good information. Okay, those 8. Question? Okay, don't forget to just follow that mnemonic to help you remember what are the features of good management information. Now, where can you obtain the information from? Okay, don't forget, as we mentioned, one of the key features of good information is it should be reliable. Okay, it should be the source need to be reliable in itself. Okay, so where can you obtain the information from? Either from internal sources or from external sources. What the difference? Okay, it's simply about this set of information. Is it, or did you obtain it within the entity? For example, the company sales for the last 1 financial year. That is internal information. Okay. But in case you're going to assess, okay, how has the company performed against the market, against the competitor, okay? As Unilever, how have we performed against, I don't know, our brand of Carson, how has it performed against Geisha, okay, the competitor, for example, okay? So that's therefore, again, the data regarding Geisha, that again, what is an external information, is outside of the entity, okay? The two main sources of information, either internal, that is, it is within the entity, or outside of the entity, which is called the external information. Okay. You want to launch a new product. Okay. Consider, okay, what are the forecast sales to be making based on how the market is performing. That is the external information. What is going to be the tax policies, okay, that KRA uses to tax these products you're going to launch. That is an external information source. Because you want to know how the KRA, how the KRA taxes this particular product. Okay, that's an external information source. Anyway, the case of the internal information is about capturing data or information from inside the organization, which involve the following. It's within the entity, is inside of the firm, which is within the realm of the firm. Okay. It can be obtained from a system for collecting data or measuring transaction. For example, sales, inventory, turnover. What has been our inventory turnover for the last 1 financial year? Okay, by inventory turnover, what it means is that for every, how many times have we been able to convert our inventory into a sale? Okay, we did invest inventory worth $1 million. Okay, how much is that 1 million converted into a sale? That referred to us as an inventory turnover. Okay. Also, you have a case of informal communication or between managers and staff, for example, through emails. Okay, that's informal. Okay, through maybe lunch meeting, okay, other meetings. So generally, it can also be caused in case of informal communication, okay. And of course, that's going to be the main, not the official, but again be the main way of passing of information. Okay, the informal communication means, okay, communication between the staff at all levels. And of course, I think even you guys, you do have those informal communication between yourself. Okay, having in quote, you have the official group for official WhatsApp group, okay, which is there for the formal communication, okay. But then of course you have your own internal class, internal communication. You have informal communication. You have, okay, having your own personal groups for the class. That itself can be an informal communication means. However, don't forget, therefore, if you're going to use therefore the informal source, okay, therefore it may not be the most reliable source. Okay, you can't go ahead and say that I will obtain information through a lunchtime meeting. That cannot be. Okay, what is done in an informal way. But anyway, okay, the company or the organization ought to encourage more of formal as opposed to informal. Okay. This is more towards the internal source of information, the internal source of information. Now, of course, you have external, okay, as I mentioned, you may want to determine from the external sources, okay. I think I mentioned example. You want to launch a new product. You may want to determine how does KRA treat this product in terms of matter of taxes, okay. Now that's kind of for an external source of information because you have never launched this product before. Okay, you're trying to obtain the information, for example, from KRA, okay, from tax experts. Okay, that's an external information source. Okay, determining, for example, okay, how do we deal with or is this particular new investment we want to make, is it legal in Kenya? Okay, you want to involve in business of mining a given mineral, but is it legal in Kenya, for example? Okay, is this business going to be worthwhile for us? Okay, trying to see how is the market going to react to a new product. Okay, we want to launch a new version of Omo. Okay, how is the market going to react to it? Now, this information is external, is not within it, it's within the market, outside of the farm. So the capture information from outside the organization might be a routine task entrusted to some individuals, for example, the ones that are in research and development, okay, to try to obtain information from the market through research as well as through research more, okay, or might be an informal and non-routine basis. Maybe you don't want to have the department, you only hire researchers as and when you need them. So you don't have a research and development department, okay. So you obtain information, okay, through hiring of researchers outside the farm. The term is you outsource, okay, that's a better term, okay, you outsource it, okay. So those are more towards the case of the two sources, okay, either internal or either external. The routine formal collection can be, for example, through tax specialists, in case you do have them, legal experts, marketing managers. I think I've mentioned this already, okay. Okay, any questions so far? Okay, no question. Don't forget at the end of the day, you may want to consider what sort of limitations does the management information has. Okay, as you use that set of information, you as the user, in this case the managers, okay, you have to bear that in mind that the set of information given to us by the uh, by the C by the our cost accountant, it has its own limitation. So of course you may want to consider what should I take into account. Okay. Don't forget, one of the key limitation of the information, the MA information, is more towards the accurate. All the knowledge I've used there, okay, all the way from accurate, all the way to easy to use. Okay, for example, okay, by the time accuracy, it's quite unlikely that the information, okay, it could be possible that the information is going to be very accurate. But in case, for example, someone has personal interest in the information, then they may end up having a scenario where the information is deemed therefore to be inaccurate. Okay, easy to use. Okay, not always going. It might not always be easy to use, okay, to the users. Okay, you may want, for example, let me give an example. As an accountant, when it comes to, for example, let's say that you are the finance director, and you want to make a presentation regarding the company, how it has performed for the last one financial year. You may want to simplify things to the shareholders, okay, but there are things that you have to, even if they're jargons, okay, you have to use them. For example, you want to present shareholder how much of company asset has increased by. Now, if someone doesn't know what is an asset, what do? You have no option. You have to use the term as it is. This is an asset. Okay, you're not going to go in detail and say that an asset is something that the company derives economic benefit. No, it becomes very easy. So you may want to ensure that the information is as user targeted as possible. However, that might not always be the case. Okay, there are instances where you may be forced to use those jargons. Okay, even if the user don't know, but you may have to use them either way. Okay, for the information to be relevant. Okay, that's the idea here. Okay, so the idea of user targeted, okay, it's a bit hard. Okay, for example, when it comes to the presentation of financial statement, okay, you may want to have the information for the shareholders. Don't get, you prepare the financial statement mainly for the shareholders, mainly for the shareholders of the company. Okay, however, you may want to consider that at the end of the day, okay, there are other users of the financial statement who do need to get this account. Okay, KRA, don't forget, they're going to use those accounts of yourself. They may use it to do an evaluation of how much tax you need to pay. Okay, for example. Okay, so at the end, therefore, since we have a diverse array of users, then having the account targeted to a given user becomes a bit hard. Okay, it becomes quite a bit hard, therefore. Okay. Now, to have the information complete, don't forget you're trying to evaluate that the information I've given is complete. But who is going to do that evaluation? Is the person who is going to, the user who is going to evaluate whether the information given to them was complete. Okay. But you as a preparer, let me say you as a management accountant, okay, you're going to discern whether it is complete based on your own position as the accountant. Okay. However, to the user, it might not be complete. Okay, so what we mean by this point is that you're going to try to see, okay, is there a chance that among the 8 features of good information, there's a limitation among them, and all of them they are limitation, by the way. Okay, all of them are going to be the limitations. Okay. Anyway, when it comes to making about the, don't forget to research the case of MA, we do also forecast the future. Okay, now forecast. Okay, who knows about tomorrow? Okay, you may predict, you may expect tomorrow will be like A, B, C, and D, but of course it's a bit hard for you to know about the future. So but the future estimate, okay, becomes a bit hard to estimate, and that's applied to all forecasts. Okay, it doesn't matter whether you have had the past experience about the matter. Okay, but if in the case you have past experience, it makes things a bit easy. However, it does not mean that it's going to be the future is going to be as you are expecting, as you are estimating. Okay. Often quantitative and financial only. Don't forget, most of the time, okay, the information, even for accounting, even for the AMA, they're going to be more about quantitative data. Does it mean that data that is qualitative is not important? No. Okay. it does not mean that it's not important. Okay, but most of the analysis, most of the forecast, okay, they're done through is about analysis of the financial aspects. Okay, that's the limitation. Okay, that we ignore the other side of information. For example, if you're going to start a new brand, let me take an example. Okay, you are a bank. Okay, you are a Barclays bank. You want to start a new brand. Okay, one of the analysis we done, okay, is more towards what is going to be the amount of the customer base we're going to in the new place we want to set up our brand. What is the customer base there? Okay, what type of customer are you going to have? Okay, are they well off? What is their financial status? Okay, we as Barclays Bank. Okay, so that's something you may want to do analysis on. So most of the time, you may ignore the scenario that, hey, we are going to transfer some of the employees from branch A to the new branch. Okay, you may ignore you may ignore the plight of those employees. Okay, that they may have to transfer. Okay, there are so many inconveniences because along the way. Okay, which most of the time is ignored. Okay, most of the time this again be ignored in the analysis. Okay, since it's not quantifiable, why do you consider it? That becomes therefore the limitation, or that becomes therefore the attitude. Okay, when it comes to doing this analysis. Okay, I hope it's clear. Okay, that when it comes to the information to be given, okay, the concern is more towards the data or the information that can be quantified. The one is not that is non-quantifiable, it is ignored. But don't forget, it has important, but most often than not, it will be ignored. Okay. I hope it's clear. I hope it's really clear. If not, don't forget, you ask. Then it can be difficult for managers with no finance training to understand. That one's for sure. Okay. That in case you do have managers who are not managers per se, you have a manager who is a lawyer, okay, and you're trying to explain to him why these accounts are not well prepared. Now, how do you communicate? Okay, you can't communicate, but the issue is that how do you pass on that information? And this is a lawyer who is a manager. Of course, you can't find this to be in real world. Now, you as the accountant, you're going to like become the teacher, and you're the manager, you're a student. You're trying to explain accounting terms to them, and it's a bit hard for sure, definitely. Okay, so the trying to pass on this management information, it will find a barrier, and this barrier will be the manager seem not to understand the set of information we are trying to present to them. Okay, don't forget, you as the cost accountant, you as the manager accountant, okay, you are the one presenting this accounting information to this person who seems to have no accounting knowledge. Okay. The other problem is that they're going to most of the time be inward looking. Is about us. Okay, we are the one in control of the market. Okay, this estimate about the future. Okay, we are in control, but generally you're not in control. That's kind of the problem. Okay, it's more towards inward looking. Okay, you try to forget how the market is going to be like. Okay, for example, all the companies as per the start of year 2020. Okay. Of course, there are very huge prospects about how the year will be. Okay, even for you as individuals. Okay, you had huge prospects about how the year will turn out to be, but the reality, okay, is very different from what was being expected. Okay, so having I would call more of inward looking, okay, may in itself not be the best policy. Okay, you have to try as much as possible to have these. There are things that might not be in the control of you as either as individual or as a company. Okay, we'll call an inward-looking perspective. Okay, which might not be the best. Okay, you think that how things were yesterday is how things will be tomorrow. Okay, an example. There used to be a company called Kodak. Okay, I don't know whether you guys know it. It used to make cameras. Okay, it was one of the biggest company in the 90s and the early 2000s. Okay, in terms of camera making. Okay, however, is it the biggest now? Okay, I think it has closed down. Okay. So don't forget, if you are true, or let me just give one of the quotes from the CEO of Kodak. Okay, the CEO said that at the end of the day, okay, we are going to make what the market need. Okay, is what the market need. Okay, is a photograph that we are going to be in quote the equipment sell to them. Okay. The photograph is what really matters to the users. Okay, so at the end of the day, the customer will have to come to our premises. Okay, the customer will have to buy a product because they need the photograph. In reality, what the customer need, by the way? Okay, this was say from the CEO of Kodak. Okay, I'm trying to see where you may be too inward looking. You forget about the outside world. Okay, so I'm trying to give an example of Kodak. Okay, that the CEO said that at the end of the day, the market will have to buy a product. Why? Because we are the best manufacturers of cameras. For sure, they were the best manufacturer of cameras then. But in reality, what do the market want in terms of the photography? This is a general question. Aisha. Aisha. Not in class. Aisha.
Yes, sir.
Yes. So I was asking a very general question that when it comes to the photography, okay, what do you really need? Is it the physical photographs, or what's the value? Let me put that term.
Please, pardon.
Okay, I'm trying to, I don't know. When it comes to photography, okay, I'm trying to give this quote that was given by the CEO of Kodak. Okay, he was saying that what the market will have to buy our cameras. Why? Because if they want the photograph, then where are they going to make? Since we are the best manufacturers of cameras, then the market will have to buy our cameras either way. But in reality, when people are taking photographs, okay, what do they really want? It's a very general question, and I don't know whether one of you is going to get it. I hope someone will get it.
I think they just want the picture.
They just want the picture. Okay. Okay, it could be. Who has an idea? Anne.
Yes.
Yes.
So could you please repeat the question?
Okay, I repeat the question. When it comes to taking a photography, okay, what do you really want from a photograph? Is it the photograph itself, the hard copy? What do you really want? What's the product? Let's do that. What is the product that is being sold through the photography world? Well, that's a product. What do you really want?
I'm guessing. I'm not sure,
Mm-hmm.
but
Wi-Fi,
okay,
just a
maybe
minute.
the pictures, the service.
No, go Wi-Fi. I want to look something.
Sorry, go ahead, Anne.
Oh, I was. Wait, you're asking what you want from the
What's the new product here that is being sold in the world of photography? What do you buy? Do you buy a camera for the sake of camera? What do you really buy?
Don't you get your picture taken?
I agree. It's about the picture being taken, but I'm trying to work out how to put it across in a better way.
No, yes, sir. I'm not sure. It's fine. I'm not sure.
Okay. Hannah.
Yes.
What do you need in photography? I'm trying to use that information to critique the CEO of Kodak. Okay. So what do the market really need? Okay, when it comes to taking of photographs, what does the market really need?
I'm not really sure.
Don't forget, what really matters when it comes to even you guys, when you take photograph, it's not that you need that, I don't know, whether physical or not, it's not that you need that particular picture itself, okay? But the reality is that what really matters is the memories that again be kept by whatever it was, the situation that you are in, is more towards the memory, okay? Because if you look at what's the real product here that is being sold, okay, somewhere you can go to, in quote, keep those memories. Now, the product was saying that at the end of the day, the market will have to buy a photograph because you're best manufacturer of photographs. In reality, what the market wants is somewhere they can be able to keep the memories. So in case there can be someone who can come and be able to keep those memories in an easier way. An example, the phone, okay? You don't need to have to buy expensive cameras, for example, okay? So what happened therefore in reality? You're going to lose the market, okay? And the product did feel that in that particular sense, thinking that we know what the market leader wants, okay? In reality, the market is one going to be dictating what's actually going to happen, okay? That's why if the company become 2 months inward looking, you forget about what the impact of market would have on your operation. Okay, so that's an example of a company that was too much inward looking, they forget about the reality in the market. Anyway. And finally, what's the role of yes, Anne?
So what's the answer? Memory.
Yes, about the memories, by the way. If look at for any photo that you have taken, why do you take that photo? It's more towards the memories that particular photo is going to carry along the way, okay? So the thinking that the market really want our camera, it's a bit too, let's say, myopic, okay? Because the market, what the market need is, can I be able to keep these memories in an easier way and of course in a better quality way, okay? It's not the camera the market wants. It's how to keep, for example, those memories. Isn't it? I know most of you. I think most of you have, I don't know, you have photos definitely. But if you have to compare the physical photo you have and let's say the online or in soft copy way, which is more? Is it the physical photos or is it the soft copy photos you have? I bet most of you have more towards the soft copy photos more than the hard copy photos. Okay, that's the kind of the failure of the market. Not realizing what the market they want is somewhere to keep those memories, okay? Not the cameras and to have those physical photos. Not there. That's what the market leader wanted, okay? Anyway, that was for the case of the Kodak, okay? Not realizing that what the real market want, okay? Being more of too much inward looking. And the same actually applies to Nokia, okay? I think most of you know Nokia, okay? Okay, Nokia was also one of the biggest manufacturers of phone in the early 2000s. Okay, is it the biggest manufacturer now? No. Okay, there are some other products that came in. Okay, the failure of the company to realize that they need to know the market better than to know they need to know the market better and react to the market. That's kind of one of the major drawback of the managed information. You will fail to recognize that hey, it's more towards the market as opposed to being ourselves. Anyway. Now, what's the role of a trainee accountant? Okay, by mean that you mean that you're going to be the cost accountant, you're going to be a management accountant. What is the role that you're going to be? Of course, the recording transaction. Okay, posting to the ledgers for sure. Okay, of course, the supervision of the senior management accountant. Okay, but either way, this is one of the key roles you have within the entity. Okay, extract information and present it to the management for use. Okay, definitely. For example, trying to extract information regarding what was the forecast, I think I mentioned that, and what has been the actual, okay? Where do we have variance, okay? Sales, example, okay? Sales as per last year, the forecast was 10 million, okay? The actual sales, let me call it A, actual. The actual sales was, for instance, that's 15 million, okay? Now you as the accountant, therefore, you present this information and of course you go ahead and do the analysis. We have a variation of 5 million. Why do you have this variance? Where do you have the variance of 5 million? So don't forget, that's your work, okay? As the cost accountant, as the trainee accountant, okay? Investigating financial matters, for example, I think I mentioned this, okay? For example, in case the cost overrun the budget, investigating what was the cost of this variance of 5 million, okay? Then helping in budget preparation, of course, definitely. Don't forget, you will be the one going to assist, for example, the different departmental managers, okay, to come up with to assist them in preparing their budgets, okay, especially those departmental managers. They are non-accountants, okay, they're not accountants. So to prepare the budget, some might find it tricky. So therefore, you as the trainee accountant, you as the cost accountant, you have to help them out in terms of preparing their budgets, okay. So it is you to assist them in preparing the budget at the end of the day, okay. And of course, also the case of supervision, okay, of the junior accountants, okay. You also mentors to do that work. Why is it trying to guide those who are new into the industry, okay, help them to have a better ground in terms of the cost accounting and management accounting. That's the key role. Of course, you have many other functions, but those are some of the key role that the trainee accountant do play within the entity. Question? Okay. So if there's no other question, if there's no other question, then that marks the end of our topic 2, okay, about management information, okay. Now, one of you made a comment that the notes I have here are slightly different from what is on the e-learning. So I will upload these notes in the next few minutes, okay, on the e-learning, just in case you would want to go through them again, okay. And as I mentioned, don't forget, we will start doing our multiple choice question for the purpose of making a self-evaluation of how well you have understood a given topic, okay? And I'll try to see how, whether either by tomorrow or maybe by next week, I'll have this question on the e-learning to help us make sure that you can be able to make a self-evaluation. Okay, so ensure that you can be able to access the e-learning. Okay. Okay, so in case there's no other question, then I guess we can end the class here. We meet tomorrow. We begin with our topic 3. Okay, so see you tomorrow. Enjoy your day.